Many people don't understand what cash value in whole life insurance is. In this video, I'm going to show you exactly what it is, and then I'm going to show you how to make it grow faster. Cash value in whole life insurance is the equity whole life insurance contractually guarantees to generate. It is the value in cash of the part of the policy that's paid up, or think of it being paid off like a mortgage gets paid off. It is that part of the policy that is completely paid for. It also is referred to as the surrender value of the policy, because if you surrendered the policy, the paid up portion of that policy would have to be reimbursed to you by the insurance company in cash. It is guaranteed to equal the death benefit in your policy once your policy matures, and it can be collaterally assigned, allowing the policyholder to borrow against their life insurance policy, either from the insurance company that issued it or a bank that honors that collateral. And finally, it can be withdrawn or surrendered back to the insurance company, and the insurance company will pay you that cash that it's worth. Therefore, it's called cash value. Cash value in whole life insurance policies generate very slowly if the policy is designed traditionally. There's two parts to a whole life policy: the paid up part and the base part. The base part slowly gets paid off or paid up, just like your mortgage does every time you make a mortgage payment. So let's look at a traditional whole life policy and see why many agents say this is not a good thing to own, because the cash value develops so slowly. And as you look at this chart, we can see that in year one, there's no cash value developed because the policy hasn't been around long enough for any of it to be paid off yet. By year five, there's a little portion of it that start to be paid off. But as you look at this example over the first 20 years, the cash value never exceeds the amount of premiums that have been paid for the policy. This is why many agents and financial planners and advisors will tell you, oh, whole life insurance is a bad place to park your money. But let's look at it from a different angle. There are riders that can be attached to a whole life policy and make it a very, very efficient tool to store money in. In this example, we're using the same amount of premium as we did in that original traditional policy, but you can see here in year one, there's already over 50% of what you paid in premium developing cash value. By year five, it's even better. And by year 10, we're almost even. But then in year 10, something happens. The premium is reduced by almost 2/3 of what it originally was. From here on out, you don't have to pay the same premium that you would for a traditional policy to develop cash value. And you can see by year 15, the cash value has surpassed now the premiums that are paid. And this policy never looks back. As you can see in year 20, it's even growing faster at a more accelerated rate. So that's what cash value in whole life insurance is. And if you want to learn how to leverage that cash value and create more profits and generate more wealth, then contact us, because that's what we do here at McPhee Insurance.